All right, now I'm joined by Oliver Sloup from Blue Line Futures out of Chicago. Oliver, we're trading two different things here, it seems to me. I sit here, I said this in the last segment, I sit here all day long and I hear hot, dry, hot, dry, hot, dry, and that's the here and now, right? We talked about your weekend wedding, right? It's hot, and maybe not as dry because it's humid, but it's just still hot. But, you know, we've also got the perception of maybe weather getting a little bit better down the road. How are you handling that, what's happening right now versus what might be happening 2 or 3 weeks out with your customers and your thoughts of what that might be doing to the crop?
Well, hot, and dry has been the recycled headline that keeps giving the bulls faith, and it happens every time this year. And matter of fact, it is hot and dry this time of year. Now, I do know that we do have bigger problem areas up in the northern plains, but what's going underreported from a lot of analysts out there is how good things look in other areas, specifically a little bit south. And I think a lot of that is going to start to make up for what could potentially be lost in the northern plains. On top of that, there's also some growing concerns that we could see demand starting to wane a little bit, which is putting a little bit of a headwind in prices. Now, as far as what we're looking for this week, we've had a pretty good sell-off here the last couple of sessions, and I wouldn't be surprised to see the market hold at these levels for corn, soybeans, and wheat. We sold off about 2 a.m. this morning across the board, and it almost looked like the algorithms were sitting there waiting with the 100-day moving average across the board for the December corn market. The 100-day moving average came in right about 533. For November beans, that came in right at about 1330, and for Chicago wheat, 666, which is a little bit ominous, but nonetheless, we basically tagged the 100-day moving average, or holding that. So long as we can continue to defend that, I think we get a relief rally that will likely get sold into going forward.
Yeah, you know, I like how you bring that up because a lot of guys don't. And, you know, when we talk about technicals, it seems to me, you know, hot and dry every day. The market's been kind of complacent with that. Yes, we got some new news that maybe the weather is getting a little bit better out there. But it seems to me also a lot of lately we've been trading these technicals. I mean, that's a very good point that you brought up about those 100-day moving averages. That's been pretty important as of late. And again, I said the other day, you know, we tried to get that gap filled in the D's corn at 573.5. We couldn't quite do it, and we've sold off pretty precipitously since then. I mean, it's been really kind of a technical market here because we haven't had any new weather news really, except for maybe things getting a little bit better out there. The short term is still the same, hot and dry. It's interesting to see how technicals have taken over.
Yeah, absolutely. And that gap was a big one. And I think we talked about it on your show. It's almost like it had too much attention on it that it just wasn't going to get filled. And that's a big caution flag for us. And looking at where we were at from contract highs to where we're at now, we're starting to mark lower highs. We're also starting to mark higher lows. So eventually you get a little bit of a triangle there, or a wedge as we call it, and you get a bigger directional move on either side of that. And that's going to be coming down the pipeline. I think it just kind of depending on how this weather pans out throughout the Midwest.
All right, it looks like we get wound up for a move either way. We'll take a look and see. Right now, we're going to take a quick break. Go pay some bills. We'll be right back with Oliver Sloup from Blue Line Futures to talk about what's happening over in that protein market. We'll be right back.